Girls, good morning. Today we are going to see about the measurement of national income. Already we have seen in that circular flow of income point A, B and C. A is income method, B expenditure method, C is product method. So there are three methods are there: income method, expenditure method and product method. What is income method? Income method actually all the households supply the factors of production. They receive income in the form of wages, rent, interest and profit. So under income method, national income is obtained by adding all the incomes received by all individuals of a country. That is GDP is equal to wages plus rent plus interest plus profit. So this is the income method. Actually, why I am telling this all the three methods because they are not asked directly what are the three methods. Based on if you understand these three concepts, you can able to do the two sums. So that's why first you understand this one, then we will go for the sum. Second one is expenditure method. According to this method, total final expenditure incurred on goods and services is added up. The total final expenditure incurred. So income can be spent on consumer goods or capital goods. So by GDP, by adding all the consumption expenditure made by all individuals, institution, government during a year. So that is the expenditure method. And what is the product method? This method also known as output method or inventory method. Under this, all the estimated by aggregating the value of final goods and services produced in the country during a 1 year. So like that is product method, all the thing. Actually here we have to find out final there are two methods are that the final good method and the value added method, because you should know what is value added and what is the final goods. So in the final good method, what they will do, the value of all final goods and services produced in different sector is included and the value of all intermediate goods is ignored. So they will take into consideration only the final goods. Ignored means they are not taking into the value of the intermediate goods. So because why the value of final goods includes the value of intermediate goods. Final goods includes suppose if you will pay money for the car, which is the final product is car, which is the intermediate products, brake or tire, everything. But for the tire company, tire will be the final goods of commodity. For the car company, which is the final goods, car. So when you are adding the final goods, they will add the intermediate goods also. For example, the price of bread includes the cost of wheat, cost of making flour, etc. So the values are paid up by during the process of production. So therefore the values of intermediate goods are accounted separately. So that's why we have to avoid the double counting. I told like this double counting. Then what is the value added method? This value added method, each stage of production process is included. The difference between value of final goods and inputs at each stage production is called value added. Each stage. The GDP is obtained as the sum total of values added by all the different stages of production process till the final output is reached. See, there is given in the example, small example, you can check. For the production stages is to bring the thing, first wheat, it will come from the farmer. Then the wheat has to be make the flour. We have to go to the flour mill and make it the flour. Then it has to go to the bakery and it will make the bread. Then it comes to the shop, retailer shop, you will be selling the bread. So where it is, value of output is, where wheat is 500. Value of input is, if you are selling those are provision stuff, they will sell the wheat directly from the farmers. So the value added is only 500. No, the input is nil. Wherein the flour mill, what is our output? 800. How? Input is 500 and value added is 300, because it has been converting into wheat into wheat flour. When coming to the bread, it is selling at 1100 rupees. How? Value of input is 800, value added is 300. When it come to the retailer, it is come to 1300, value added input is 1100, value added is 200. So total value of this final product is how much? 1300. It includes the value added at the stage of wheat, they are not added, but at the stage of flour they added 300. At the stage of bread they added 300. At the stage of coming to the market he added the 200. So totally selling rate is 1300. So this is a simple method. Why I am giving this method? To know the sum in your what is given in your book. And also know this how many stages it has come. It has come to the 4 stages of production. Each stage the value is added. So for example, the same example, see the farmer produces and sells wheat for rupees 500 to the miller. What he is doing, he is converting into the flour and giving 800 to the baker. Baker again is converted into bread, he is giving to 1200 to the retailer. Retailer again selling to the consumer for 1300. So each stage is how the value is added for each time. So that will be called that is the final stage of product. Okay. So this is all the 3 steps for calculating the national income. So you understand this clearly. Then this, what is the question they have asked in the question? What is the question is? Explain the numerical example to show that all 3 methods of estimating GDP the same answer. Okay. So what you have to, if you understand this 3 method, then you can be able to understand this question. So they are given the example of the firms A and B. And firm A uses no raw material and produces a cotton worth of rupees 100. And firm A sells its cotton to firm B, who uses its produce to the cloth. So firm B sells the cloth to produce to the consumer for rupees 200. So that sum is given. Okay, go through the sum. We'll discuss in the Google Meet about this sum. So what is the value of the firm A? What is the value of the firm B? How it is going reaching to the consumer? This will be the same example what I told about the wheat and the bread. The same thing only. Okay, go through that properly. Then we'll discuss. Thank you, girls.